Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you gotta get spotted. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Well, Tuesday, we got a bit more economic news today. We get S&P PMIs. So that is, it's not as great as the major PMIs, but that'll probably give us a decent amount of movement. And, we had more movement than we expected yesterday. So let's come over to the charts, check where we're at overnight. So here's the treasuries, and it looks like the gains that we made yesterday are pretty much being erased. But, it's actually been a little bit of tighter of a start today than it was yesterday. So I don't know if the treasuries are actually doing a whole lot today or not. S&P 500 kind of had I would consider this a stop run because it was just, it wasn't huge in magnitude, but there sure was some really aggressive trade in there. So we are preparing ourselves for earnings, though. Some of the bigger earnings are starting to come through now. Oil taking a bit of a dive overnight. And well, it still seems that the market does not believe that the demand is there to support these prices. Gold and silver, man, yesterday was one of the biggest down days in gold. Speculation. Oh, hold on, we gotta turn the speakers off. Speculation that Chinese investors that were long gold, speculating taking profits, but that was a big decline. I don't know if it really means anything. It's kind of funny the way that gold works. That it's oh, we got this super great thing, and then they don't want gold to be up. They really don't. Okay. Kaba coming back with it as well. So that I think would kind of support the idea that the metals complex is coming back because Chinese investors are kind of pulling back. They continue to try and jawbone the Japanese yen higher and nothing happens. And apparently at 105, and granted our futures are not the same as the spot number, but apparently somewhere below here is where intervention starts to become extremely likely. Meanwhile, the dollar still above 105 and a half. Not doing anything too crazy this morning. So that's basically the situation this morning. A little sore from our workout yesterday. I'm gonna give my back a little bit more support here. Not that much support. There we go. That's good. All right. Good morning, Octavius, Captain Price, Alan, Uzi, A. Paul, Nubia. Oh, you changed your name over here now too, huh? Oh man. Gonna be out for a couple of weeks. I didn't have a chance to compile it yesterday. Maybe I will today. I don't know. We'll see. Kind of depends on whether I can get the stepson to mow the lawn or if I have to do it. I would prefer not to mow the lawn because I'm allergic to the lawn, but the front lawn at the very least needs to be mowed. It's that time of year now. And good morning, Robert. How have you been? Okay, so there's no bottom of the hour news, but we do get S&P PMIs. Should we put the time right here? 9:45 ET. And then earnings. Earnings a big deal here. I don't know. That's all I got. It seems like I said more than that when I was going through the charts, didn't I? Should we say along with earnings still in blackout period? I'm gonna make a note up here on this one. Gut not feeling well. So I want to journal here how well I'm feeling, because I do have a theory that that can sometimes affect my decision making. I don't think it's bad enough for me to hold back from taking trades today. If I get a good opportunity with the PMIs, I think I will take it. I think something to come in here on the PMIs. Will we see front running? Because we've seen that with a lot of these economic numbers lately. I just watched a video of a person on TikTok that doesn't know anything about economics saying, well, if everybody's in debt, why don't we just print more money? That's why they're doing it. That's why they're doing it. You know what? Something that bothers me with like the whole inflation thing this morning is that we as people have been tricked into believing that what we do is irrelevant. Like, inflation is a force that we are subjected to, and you know, our individual behavior, or well, let's not say our individual behavior, but our collective behavior has no impact on it, right? Our collective behavior has a significant impact on inflation, okay? More labor supply out there, that tends to mean less inflation. That's part of why they like to import workers and things like that, right? They want as much cheap labor as possible that allows them to make goods cheaper, and then you get, you know, the business owners, they make more money, and then the inflation in the economy is not as hot, and so the politicians are happy. So, like, if you all collectively decide that, it's too expensive to have a family, right? So you're producing less workers. I need to have this thing and that thing first, versus you just don't get that thing because you had kids and you're too poor, right? That's more demand. Increases inflation in certain objects. If you decide that it's too expensive, both of you have to work, then you'll have more money. That's more demand. It's also more workers, but it's more demand too. I don't think people realize that these kind of individual decisions to like have a double income household, wait until you feel like you're absolutely completely ready before you have kids. These have aggregate impacts on the economy, and in a way that I don't think is positive for the average person. Yeah, go long babies. That's so here's the thing, guys. Here in Utah, super conservative, okay? There are a lot of double income households, but there are a lot less than there are in other areas. And we have kids, even if, we don't think that we're financially ready. You have the kids and you make it work. And we do not have the same problems with the cost of living in Utah that you have in other states. Utah has the largest homes per capita, but some of the lowest income per capita. But I'm saying lowest income like overall, not like cost of living wise. When you factor in the cost of living and everything, it's actually one of the best. Why is that? It's because more mothers stay home and more people have children. Just saying, guys. I'm just saying. Don't shoot the messenger. Nobody's shooting nobody. It doesn't look like anybody in chat cares this morning. They're all eyeing the treasury right now, going like, do I want to go long? Well, I'm not seeing a lot of volume in the 10-year as of yet. I think that I should, I kind of see the case for a long price-wise. But the volume looks a little bit... There is a little bit of a reversal starting over here in the dollar, though. Japanese yen's going nowhere. Man, let me tell you, what's like the thing that sticks out the most to me right now in the charts? Look at that. Look at that. Oh, wait, I need it to be yellow. Look at that, man. That is like the smoothest trend in oil I think I've ever seen. Like, it's not just like, oh, that's a big instrument and that's a big, really consistent trend. It's in oil. Oil is often one of the messiest instruments out there. And to see a trend that clean, that is awfully unusual. Unusual things going on in oil this morning. Speaking of relationships, so here's changed my view. People in relationships have no business going through each other's phones. I think the problem is that if you would want to look through your partner's phone, then maybe there is a reason for you to want to do it. I've looked through my wife's, like, she'll let me look through it. There's nothing interesting. You don't want to go in there. I don't. You'll be horrified. There's nothing that's like, this would change my relationship, or like I'm really glad my wife did that. That's how she ended up getting divorced. She's like, I think I should go through my husband's phone, and she did it, and she found some things that justified a divorce. But if you go in and you don't find anything like that, the things that you do find will horrify you. So just don't do it. Just don't do it. Dare I say that looks algorithmic? My wife's phone is such a mess, right? Dude, so like, my wife texts people a lot more than I realize, like, or I thought. Like, she talks with her kids and some of her friends that she doesn't see very often, but they stay in touch through text and everything. But like, the conversations that they have are just like, you know what? I don't need to read that. NinjaTrader doesn't work with Rhythmic. It does, but it doesn't. Yes. So if you go and you buy a new NinjaTrader license, you will probably get, and it's like a multi-broker license, you will probably get access to Rhythmic for NinjaTrader brokerage. But Rhythmic for NinjaTrader brokerage doesn't exist anymore as far as I understand. Like, you can still get it if you're on the Phillips Capital side, and I don't think that they've gotten rid of the Phillips Capital side. But the NinjaTrader CFM side, they don't have Rhythmic. And so then you can't get Rhythmic. Okay, but if you use the old version of Ninja, so like the desktop version of NinjaTrader, that's like not the latest. That's like, what is it? Hold on. What's my version? 8.8028 instead of 8.1. And you use like a demo license, then you get Rhythmic. And that's how I do it. So even though I have a full NinjaTrader license and I have a developer NinjaTrader license, I don't use it because that doesn't let me use Rhythmic. And at some point, I'm going to feel compelled to upgrade NinjaTrader for some reason. And I don't know what I will do. I love the platform, I do, but I don't want to use the brokerage at this time. Took a long bounce off the 5% in twos. I mean, it sure seems like we're floating up here. I just don't like the volume, though. Maybe a little bit of a sign that we're getting meta order long in the 10-year, but like the amount that is trading per clip is very, very low, and I find that concerning. That is range-bound volume. Like, that is something that, like, they might bust out the high here, but then they almost immediately mean revert and catch you, sort of a thing. So I'm really weary about trading in the 10-year at the moment, even though the price movement seems okay. You're moving to Iron Beam. Got the latest, might need to move brokerage to Iron Beam. There's some nice things about Iron Beam. I'm telling you, man, because you're in such a competitive market, when you get hyper competitive markets, specialization becomes more of a thing. And I feel like that my platform choice right now perfectly matches me. Like, but I need Rhythmic data. If NinjaTrader brokerage provided Rhythmic data, then maybe I would switch back. Even though I really love Edge Clear, and it would make me extremely sad to leave them. You need the MBO? Okay. So, yeah. So there is a new version of NinjaTrader coming. Is it out yet? I don't know when it gets released. But every time I go and I read through them, I'm like, oh, that's nice. That's nice. That'd be interesting to look. But they're not actually things that I would actively use. So far, I just remain on the version of the platform that I am. CQG only offers market by price? Are you sure about that? You sure that that's not just like an add-on that you have to pay for or ask for? Smitty thinks MBO is a gimmick. Who can say? Who can say? If you're an algorithm, it's not a gimmick. If you're an algorithm, it's not a gimmick. Because remember, the whole thing is that using the information that we have when you are determining the sign of an order, whether it was a buy or a sell, and, you know, all of these other sorts of things, it can be as high as 10, even 20% in a highly illiquid instrument. Okay. So, does knowing where you are in the queue with a 10% difference make a difference for you if you're an algorithm? That is, you're fast and you're at the front of the queue anyways, right? Yes, it does. But does it matter to the retail trader? Can't prove that. Can't prove that. It's additional information. Is that additional information actually beneficial to you? I can't say. You know, like these guys, they can see what, you know, when there's a big order, they can see that a large portion of it is one order. But my observation has been that if I saw a 5 or a 6 somewhere on the offer up above us, that I could pretty much guarantee that 2,000 of it is one order. So, nor am I sure that like any of the platforms are able to completely take advantage of the power of it. There's the big thing is that you supposedly you can detect when stop orders are converting to market orders and see that those market orders were derived from stops. Does that actually tell you anything? I don't know. You're wrong? I don't know, man. Can you prove that? This is the whole thing. I have not really seen any research on market by order. So I don't know if that additional... I think I saw one study where they gave it to a machine learning algorithm, and the machine learning algorithm did do better with the market by order data. So, like, there's some evidence to say that it helps us. That still doesn't tell you if, like, it really adds a lot to a retail trader. Yes, new NinjaTrader version has anchored VWAP. Yes, so you can go and you can say, I want to see what the VWAP is starting here. Because, like, there was this big news event. I wait for the big news event and the liquidity come back, and then I anchor my VWAP to see where, you know, people's positions are from. Mm-hmm. But the thing for me is that CQG just doesn't give you enough levels. Like to me, I care that there is a large order up here at 108.08. I care that there's these big orders at 28, 18, 16. So it seems like every 4 points there's a large order sitting there. Can't you pay I don't know. But I get that many levels with Rhythmic without paying for extras, so it still wouldn't make sense. The other issue is that, as far as I can tell, Continuum, even though Continuum is provided by CQG, it is different. And not as good as regular CQG, as far as I could tell. I don't remember why I believed that. It's been so long. It's been like 2 or 3 years now, man. I think I've been over here for 3 years now. CTS is still the old school 10 levels. CME markets. But still, the issue is at some point NinjaTrader is going to provide a feature or they're going to make like a code breaking change, right? Like they'll make a change that affects the programming enough that from then on you would want, you know, all of your code and everything to be based on that version. And then I'd be in trouble. Then I would have to be like possibly set something up to be able to use them. I guess one of the things that I can do is, as a developer, you can get access to the Myris stuff. What is it that Uzi uses? Uzi doesn't use Continuum. He uses NinjaTrader, but he doesn't use Continuum. What is it called? Kinetic? Is it Kinetic? I think it's Kinetic. You could pay for Kinetic and connect NinjaTrader to Kinetic. Okay, well, the Treasury kind of, I think, proved me right there. I said, I don't like the volume. This is the sort of thing that like breaks and then comes back to the bottom of the range. And it did came back to the bottom of the range. So that doesn't make me interested in it. Okay, I know what's going on. Now I'm going to take... No, it's probably likely to be in the... I think a little bit of a funk until the PMIs. Yeah. The good news is that so far NinjaTrader like understands this situation, I guess, and has allowed, you know, like they've even updated the older versions and stuff like that to be able to still connect. So far, it's all good. It's all good. That's the thing, though, also, is that the industry changes so much, right? Like, I've thought many, many times, let's make a video comparing all of the major brokers and all of the major data platforms and all of the major software platforms. But the problem is that like information changes on a month-by-month basis. So as soon as I would make a video, it would be outdated. So I'm browsing through Reddit now, and there's a post on the day trading subreddit that says, "Can anyone profitable prove it?" And then there's all of these comments talking about it and why it's difficult and all of these sorts of things, and nobody actually proving it. 50 comments and still no one posting proof. Well, I can prove, you know, the recent history of how much I've done, but like my whole thing is still, I really think that if we were to define a standard as profitable trader, what should the profitable trader standard be? And my argument is that it should be 5 years, and I don't have 5 years. I've been trading for 5 years, but I don't have 5 years of profitability, right? I had in 2022, was it? What year is it? It's 2024, yes. So in 2022, I was profitable. In 2023, I wasn't. Now, what can happen is people can prove it to me, right? So one of the concerns is you take all of your broker statements, yada, 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 and then you post it. And then there's possible, like, people could steal your information or things like that is one concern. And then the other thing is, like, you know, are they screenshots? Like, how do I know that you're not faking them? That sort of a thing, right? But you could provide me 5 years worth of broker statements, and only I would look at them, and then I could verify it for you. But unless you've got 5 years, I don't really think that exercise would be worth it, right? If you had 5 years, I would love to see them. I would want to go in. But you know what's the funny? So this is something that I was thinking about yesterday that I want to go into, which is that, like, because remember we were having this conversation that, well, my mentor, he still believed in technical analysis, and we did a lot of back testing and so forth, and found that a lot of the ideas didn't work. And his periods of success were from swing trading the treasuries during the more volatile times, you know, like after the 2008 crisis, when treasuries and were really high and there was quantitative easing, and so there was a lot more money to be had in the treasuries. But the things that I learned from him that were the most useful were kind of all these tiny little things, like how the auction works and stuff specific to treasuries, like information specific to the treasury market that for some reason it kind of gets passed from person to person but isn't really out there. And the point of all of that is that I find that some of the best traders often don't even understand why they do well, or where their biggest advantages are. Because if you're going through, especially if you were starting with technical analysis and everything, a lot of it is like you just kind of stumbling along until you find something that works, and you're using that like machine learning part of your brain, and your neurons configure themselves, and you don't necessarily understand how you get the answer that you do. So it is often the case that some of the best traders don't understand where their edge is actually coming from. So if I found a retail trader that had 5 years of profitability under their belt, I would really like to go through and look at it and try and understand where their edge was possibly coming from. And I would bet you that there would maybe be some insights that I would be able to gain from looking through his results and discussing with him how he does that strategy, to see where his edge is coming from that he doesn't realize. But you know what? To be honest with you, I'm not sure I will ever see somebody that is a day trader and has 5 years under their belt. I'm not sure. And they're trading futures, maybe stocks, but futures, I don't see it. I think that what really happens if you're really a good trader is, okay, maybe you're day trading because that's what's available to you, right? But then as you go up in size, you probably switch to swinging because there's more money there. You know what I mean? And so from our perspective, the kind of person that we're looking for, we would overlook because we would go, oh, well, that guy's swing trading is, so it doesn't apply to us. Right? That said, there are people that have 1 or 2 years worth of profits and so forth, And for some reason, these people never actually show the results. And I think it's because these people will have embarrassing things within their results that will make you question it, and they don't want you to see that. Which is kind of funny, because if you did post like 2 years worth of profitable day trading broker statements, and there was one day where you like blew up your account or whatever, and then you recovered it, I don't think anybody would care. I think the retail traders would eat it, because all they would care about is that the end number was positive. When you get really big, the markets you can trade are limited. Yeah. I mean, you come in and you trade the treasury, you can put a lot of size in the treasury, can't you? But yeah, day trading, there's a certain size at which I don't know if day trading is really practical. Thousand contracts can only work on ZN. Well, but you can average into a position and everything. I think you could still trade a couple $1 million on a lot of these instruments. I think one of the things, though, is like a lot of the people that are probably quote unquote profitable are probably taking super teeny tiny little wins, right? That probably wouldn't scale. Okay, so that uptick was a little bit different. They all moved up. There's a lot of volume trading it. We're at the top of the hour. I don't think that it gives me a clear idea of long or short, because it kind of ticked up, it came back. There's a pretty big iceberg at 22.5. So it looks like buyers and sellers are kind of meeting each other here at 22.5. So really hard for me to know which side is actually larger in the long run. I'm definitely seeing a lot more level 2 activity here, though. Like, especially after it upticked, it was just, you know, numbers were rolling all over the place. Okay, but you know what really weirds me out about this day trading subreddit is that, or post, is that didn't they like create this thing where you could use this service and it would, you know, connect your broker to it and it would show you that you're profitable or not profitable? What happened to that? That one that everybody thought was a great idea. I don't see it anymore. Probably they decided that you're just providing data for somebody to trade against you, so why would you do that? See, here it is again. If you make the cost of living prohibitively expensive, don't be surprised when people can't afford to create life. No, dude, our ancestors did it anyways. And the economic effects of that made it so that things largely worked out. Okay, like there are definitely people that are like dirt poor, don't have a job. They're like 35 and you're still working minimum wage. Maybe you shouldn't have kids. Okay, but like most people that have a career, you just make it work. You make it work and everything evens out. Because if y'all have kids and you can't afford to spend money because y'all have kids, then the economy adjusts itself to accommodate that. A lot of people can't even afford their own place. Yeah, because, well, okay, that's a different issue. That's a different issue. Depends on where you live. If you can't afford your own place, move to a different state. Like, yeah, if you live in LA or Massachusetts or New York, especially if you live in Massachusetts, you're not going to be able to afford a place. I saw this guy, this study where they were saying, like, how much does a family of four need to live comfortably in each state? And in Massachusetts, it was like $320,000 a year. Like, oh my gosh, that is insane. In New York City, I had roommates till I was 32. Jeez. Yeah, it's the housing situation is different because Democrat policies are making it difficult to build homes. And then when we have a problem, they, instead of saying, hey, maybe we should fix the things that are making it difficult for home builders to build homes, they go, well, these people are being greedy. We need to limit the prices and do this thing and this. And then it just makes people build even less homes. It makes the problem worse. Oh, man. It's so... I get the conspiracy theory side of things, right? Because there are some, like, very obvious, well understood things about how this stuff works that, like, nobody in the modern day talks about, and it seems to me that it is all, like, intentional, that they don't want you to realize that if you build more homes, that the cost of housing will be cheaper. They want housing to be expensive so that you will turn to the politician to try and fix it for you. It's either that or these people in power are really that economically ignorant. It's crazy watching old videos of ES. It used to be 1,000. When I started, it was like 500. Yeah, it's not profitable to build affordable homes. All they build now are the 2 million plus houses. Like, I would, let's not say that it's not profitable to build homes, but it's not as profitable to build affordable homes. Like, so here's the thing, is like, here's the demand. I'm going to draw it as a big circle because I don't know. Maybe it should be a chart. Okay. And then here's the supply is like, let's draw it down here. Supply is only like this much of it. Okay. So if this box is like, this low end is, this is low and this is high. Okay. We only have capacity to build a certain number of homes. Okay. You make more money building this home than you do building this home. And so the supply actually ends up matching up like this. And then what happens? These guys down at the lowest end, they don't get anything. As a developer, it doesn't make any sense. Well, I mean, but people are building houses and are making money from it. I mean, I know people that are building houses and making money from it. So, but it's difficult. It's definitely difficult. And there were things that they did after the 2008 crisis that have kind of made it difficult to build homes, right? Like, after the 2008 crisis, the home builder industry was devastated, and then they never did anything to rebuild it. And so we've just been underbuilding houses. And then on top of that, you have these policies in the wealthiest areas, making it like, okay, so like if I want to build a house, I have to wait like a year for a permit and a year for this and all, you know, it takes so much time even break ground on it. And those are all costs that get added into the cost of the house. And so then it becomes like nigh on impossible to build houses in places like San Francisco and New York and stuff. But that's where, like, I come back to, like, we don't have these problems in Utah. Okay, there is a problem with housing for the lowest segment in Utah, just like there is everywhere else. But by and large, people in Utah have houses. That's not the case in Boston, for instance. Oh, I don't know if that's true, Morgan. Utah has a lot more space to build than these coastal cities. I don't know if that's true. I mean, there are still undeveloped areas, I guess. Hold on, I want to zoom out here. Like, ooh, the Utah Valley. Well, okay, there's the Salt Lake Valley, and then there's the Utah Valley, and then there's, I guess, Ogden, which I wouldn't really be considered a valley. Like this area over here is just like deserts. Okay. So like all of this is developed. So, I mean, I guess there is room. Like over in here and a little bit over in here. But by and large, we've filled out most of the easy space. And Utah is one of the fastest growing areas. So... I'm not going to say that, like, there's not some places to build, but I think that there's pretty heavy constraints on, like, where you can build new stuff. But I don't think that that's why, like, you know, areas like Boston, for instance, are having such a hard time with it. It's their policies. Problem in New Zealand and Australia is that Chinese nationals have bid up the housing market and are willing to pay top dollar. Yeah. I mean, that probably is a factor. You know, this is an interesting kind of thing because usually when you look at those statistics, so I don't know about New Zealand and Chinese nationals in particular, but like here in the United States, there is this big narrative that the reason the cost of housing is so high is because hedge funds are buying houses now. Or you know, because Chinese people are buying up houses. And when you actually look at the numbers, like the number of these houses that are being bought up by hedge funds, it's still a pretty small percentage, relatively speaking. There's been this piece of misinformation going around that like 43% of all houses bought in 2023 were bought by hedge funds. That's total BS. That number was just straight up false. It was published by one online outlet, and like everybody just keeps recycling it, but it's the entire thing was false, fabricated. It's the real number is like closer to 15%, and that's not even hedge funds. That's just like all investors. So, okay, but 15% is a lot. Okay, like if I came into the treasury market and I decrease the total volume by 10%, that would have a huge impact on the treasury market. Okay, so like you're talking about a small thing that can have a large impact, right? But then the thing is like, oh, okay, but if we change these rules so that it's easier to build more houses, even relatively small incremental changes in the number of houses available can have huge impacts on the price. So, but it's, you know, this is another thing that like, this is a problem like everywhere. That the entire Western world, they haven't been building houses to keep up with population growth since 2008. And I'm telling you, it's the neoliberal policy that started under Obama when he came in after the 2008 crisis. Nobody ever did the work to say, how can we make it so that people actually start building houses again? For my city in Romania, the housing market is strong because the demand is high and you can easily find someone to sell to, no matter the price, and I believe that this is something that rhymes everywhere. Well, I don't know if that's true either, Andre, to be honest, because there are, like, the housing market is going pretty slow. The housing market is pretty slow right now. Like, with interest rates high, not a lot of people are getting into houses. Like, honestly, the prices are pretty silly. Like, I survived because I got in early, but if I were to switch and buy a new house right now with current interest rates, like, oh my gosh, I would probably be paying almost double. And then you say, okay, so we're going to bring the interest rates down, and yeah, then the prices will really go up. At least if you buy right now, you get, maybe you get an okay price on your house, and then in 5 years you can refinance it during the next financial crisis. But if you wait, then, you're getting as low of an interest rate as you ever can, but the price is going to be high. And so that's just going to be what you pay forever. And it's probably going to be just as high. Oh, by the way, oil having a little bit of a rebound now. But the real takeaway from all of this should be what? Why aren't the politicians talking about what are we going to do to decrease the cost of housing? Do you ever wonder that? None of the politicians are talking about it. Seems to me that, like, on the right, in the United States at least, on the right, we are just too dumb to realize what an opportunity that is. And the left doesn't want to talk about it because they know that it's their fault. Initial balance is measly 5-tick, but I'm sticking with the long. Why would you prefer to stay long in such a tight market if it's not going to move until PMIs? People have their wealth tied to their home values. But is it really actually wealth? I don't know. Because there's MBOs out there? Wow, okay. There is liquidity there this morning. It's just like the market orders aren't there yet. Asif Ahmed, welcome back. Okay, so like the Reddit post that I was like going off about, I was going off more about the title that the person gave. So then I didn't actually read the whole thing. So when I start reading the whole thing, it like gets even worse. So they claim that the people say, can we have affordable college so we can find good paying jobs without crushing debt? And the conservatives respond, no. That's not true. The conservatives are not saying, no, you cannot have affordable college. The conservatives are saying the reason college is not affordable is because of the government. The government is giving student loans out like candy, and then the colleges respond by increasing the tuitions because you're creating artificial demand. And they're doing this, quite frankly, in my opinion, they're doing this because they want college education to be free. They are intentionally disrupting the free market. You go and you look at all of the things that have increased over the past while. Those are all the things that the government meddles with. Except for housing, the government doesn't subsidize housing as much, but that's more of an issue of the rules make it hard to build houses. You're long 23. I don't get it, guys. I just don't. I mean, like Octavius, he gave a good answer. He tends to win on his trades, so who am I to question him? But I really don't see any reason to be in any kind of a position until the PMIs are out. Because here's my flows. We got PMIs. There's Japanese intervention, but I don't think that we're there yet. It's earnings today, and we're still in the blackout period. So do any of those particular flows that we're expecting today tell you about orders that would be happening right now? No, they do not. Ergo, I don't see any reason to be in any kind of a trade whatsoever. Nor does that really tell you if they're going to be buying or selling today. The PMIs, though, the PMIs come out and they're hot. That could create selling in the treasury, right? Let's hear what's this. I mean, so I'm not doubting that there weren't MBO orders there, but what makes us think that that gives us a good trade? I honestly can't read your screenshot, though, because I don't know how your MBO stuff works. 51% chance. Well, I don't want to take no trade on 51%. Oh. Here, you know, if we bust out of this range before PMIs, I'll be really surprised. I don't know. That last tick up kind of made it look like maybe they would do it, didn't it? So I'm not gonna completely discount the chance, but I think the most likely thing here is that in, what is it? So it's 21. So in 25 minutes. The most likely thing here is that in 25 minutes, the 10-year treasury will still be sitting at 23. So if that's the case, why bother putting anything out there? I guess that means he could be long 22.5 and just sit there and chill. But then do you know that PMI is going to go up or down? I'm super skeptical that anything that you're going to see in the book is going to really tell you that. If we were getting some trend and some front running, because we have had that lately, but it doesn't seem to be happening today. TLT open will make or break it? I'm going to bet you the S&P 500 open is relatively quiet today. Because again, there's PMIs. They're S&P PMIs, don't get me wrong, that they're not nearly as big of a deal as the ISM PMIs, okay? But they are PMIs. It is updated information on the state of the economy. That's the only major thing we really got going on today until earnings. They're probably going to be a little bit hesitant to do anything before PMI. Then PMI's out. Then we can kind of survey the situation. Then it might be kind of like a little bit. I don't think that it will be a fast-moving market after that. Like, let's say the PMIs come out and then they're in line. Okay, but then there would at least be opportunity for us to move. Just probably wouldn't be able to predict where it's going to move. This subreddit, it's called Fluent in Finance, and like all that happens is people just post these like political hit pieces, and it's kind of annoying. Well, if you actually want to talk about finance, like I can rant against it, I guess, because apparently a lot of people don't understand it, but I would prefer to talk about more interesting. So what's something more interesting we can talk about? There was a post this morning on Zero Hedge talking about some analysis from Goldman, where they were asking, okay, how high can the interest rates go before it like starts to really hammer the market? And their conclusion was that the change in the interest rate mattered more than like the absolute level for this kind of an analysis. So basically they were saying, if we moved more than 20 basis points from here, so like they were saying, if the 10-year got above 4.8, then it would start to really hurt the equity market. So remember, we've talked about this before, like way back, where there's this whole argument about what matters more for handling inflation. Is it the change in interest rate or the absolute level of interest rates? Do you actually have to get the interest rates to, a 5% or a 6% or whatever the Taylor rule suggests it should be in order to bring the economy back down? Or do the rates themselves just need to go high enough to scare the market? And I don't know if we really answered that question, because like we had a certain amount of change, and that change was about what we thought should be enough to cool the market off. But that amount of change also happened to bring us to the price, to the interest rate level that like the Taylor rule would suggest too. So like, okay. But then it comes back to this. Have you seen this study from Larry Summers? Because what Larry Summers is saying is that we've changed the way that we calculate CPI to not factor in the cost of interest rates on your housing costs, which, if you're trying to figure out what the appropriate interest rate is, having the interest rate in there kind of doesn't help you. So it totally makes sense for them to like take that out. Okay. But if you're trying to understand like why are people unhappy right now, then it's essential, because you have to be able to factor in the cost of financing the loan into the cost of your house to understand why like everybody's so unhappy and can't seem to afford a house. I need to vacuum my chair. I got this chair. I need to make a video about the chair. And the seat is wool. The seat is made out of wool. It's very rough wool. And I kind of like it. I think that it gives you so it prevents the seat from getting too hot. And it's durable. But the problem with the wool is that on the corners, it attracts all this lint and dust. Been trying motive wave since yesterday. Seems to be good versus Sierra charts. This is also good, but UI is not so good. Oh, I don't know if I would say that their UI is not so good. It's just different, right? It's one of those things where you have to use it for a while, and once you kind of understand their interface and why they have it set up that way and stuff, you kind of sort out. But I guess that's more you just get used to it, right? You think it's ugly? Oh, okay. I don't remember how it looks. I kind of feel like the interfaces, I thought that in my youth, I thought that interfaces would look better than they do today. I thought that they would be more futuristic and have all sorts of crazy effects and stuff because they have the power to do it. But turns out that, it's hard to come up with those sorts of things, and so people just don't make them. And they're distracting, so. I still use the gray theme for Excel. Okay, so on the S&P 500 open, there was a little bit of a dip, 5 points, but nothing too big. Treasuries back to the high end of the range and slamming into an iceberg, and there's a lot of icebergs in here. So it does look, I am hopeful that after the PMIs that we will get some action, because there does appear to be some big guys out there. Yes, Sierra Charts has many features that you can think of, but not organic. Yes, because what happens is basically this, is another platform comes out and they put out a feature that's new and really cool. And then Sierra Charts go, oh, we need to have that feature too to be able to keep up. Okay. Well, so I'll go and program this feature, but then where should I put it? Because the platform wasn't designed with that feature in mind from the very, very beginning or anything like that. So then it's okay, well, there's this menu here, and there's this menu here, and this menu here. I guess we'll just stuff it in there, right? And if you do that year after year after year, you get this interface that's just a complete mess and makes zero sense. And then on top of that, I really don't think that the people that are developing it are really traders so much. So they might not really intuitively understand themselves what would make the most sense. That's where I think Jigsaw has a big advantage, is that, Peter is a trader. And so he's able to keep a pretty unified vision. He's also able to say, hey, yeah, these other guys, they have this feature, but it doesn't really help us, so we're not going to add it. So it doesn't be, the program doesn't become all bloated and complicated. It stays tailor-made towards the purpose for which it was made, which is to have the best DOM. Yes, Jigsaw has upfront cost in advance. It does. I don't know, you get what you pay for. They can charge the upfront cost in advance because it's the best DOM. And the people that really want the best DOM are willing to pay that. They definitely had too much time to search conspiracies. Not sure if trading fits there for Sierra Charts developers. Yeah, dude. There's been some pretty crazy stuff on the Sierra Charts. You know what? I've noticed that since those posts, maybe I'm crazy, but it seems to me that since those posts got attention, that I see a lot less people asking about Sierra Charts now. But I don't know. The thing that I don't like about Sierra Charts the most is that you are, stuffed into their ecosystem, right? You have to use their data provider, their broker, their everything, right? Your Sierra Charts everything. And I hate that. I mean, granted, the whole industry is going in that direction. That's basically where NinjaTrader has gone. I hate that about NinjaTrader too. It's one thing that I hate about NinjaTrader. I think I love just about everything else about NinjaTrader. But Jigsaw is, I kind of feel like, the only one remaining that really believes in like an open ecosystem. But again, if cost is really your biggest concern, I would find a broker that provides a free option, right? Like, I think if you go with Iron Beam, they have a platform that is essentially free. Optimus Futures, they have a platform that's based on Quant Tower that's essentially free. EdgeClear has a platform, but their platform, I think, is $30 a month. NinjaTrader, they have a weird policy. They charge extra for order flow and footprint. Technically, no. Well, okay, so if you to use the footprint, you have to have like a full license, and I think that they do have like monthly licenses that are more, right? But you can get like a cheaper license as long as you can program. Because the real issue is that NinjaTrader's built-in order flow indicators are not all that amazing compared to what you can program yourself or find out there for free. So or you'll find out there for free. There's free ones. That's why what I'm saying is they're so easy to make that like they're everywhere to download. Like, I can just give you some. You need a cumulative delta indicator? Okay. Got one. I got 3. The Sierra Charts owner is an anti-fluoride. Well, you know what? That's good. Fluoride shouldn't be in the water. We don't need fluoride in the water. It's bad for you. Doesn't really have the health benefits that were claimed. We should get it out of our water system. I can't see myself being an activist, but it seems to me that the Sierra Charts guys also have a couple of other things that like again, they were like, oh, we're not going to add this feature because the world's going to end soon anyways. Okay. Like, I have a really, really hard time putting a portion of my trading setup in the hands of somebody that fundamentally believes that the world is going to end in a few days or a few months or whatever it's going to be, right? Because what makes money, the best way to make money is to wait for everybody to be panicking about the end of the world and then buy it, right? So, like, usually it works out. Always, well, in in US history, it's always worked out. So having somebody that's like fundamentally panicked about the world is not, I think, a benefit to you. And then on top of that, they also have to be your data provider and your broker. No thanks. Platform seems good. It seems like most of you guys that have it, that you enjoy it. So I'm not going to say it's a good platform, but not for me. Oh, thank you. Can run with me, Concierge? How? I'm not going to pull up the pricing right now. We've got 5 minutes for our news, so can talk about it. We are looking for S&P services PMI flash, a reading of 52, and manufacturing PMI flash, we're looking for a reading of 52, and ergo the composite, we're looking for a reading of 52. All three of the numbers are supposed to be at 52. That's a little odd, but I guess that makes it easy for us to read when the news comes out. Wait, what? Man in London places £50,000 bounty on his own head for any ISIS terrorist that kills him, adding, "I've got a sword, good luck." Really? Yep, and there's a picture of the guy with his sword. Wow. I keep seeing ticks that make me think, oh, wait, all done. But guess what? What did I say? What did I say? Pretty sure that we'll still be at 23 by the time the PMIs come out. And then do you know which way the PMI is going to be? Because I kind of think that unless you know what the PMI is going to be, there was no reason to be in. So far. Okay. So I don't think I have any reason to believe that I know what the PMIs are going to be, but I can guess, I can speculate, and I'm going to speculate that the numbers will be slightly hotter than expectations, because the expectation is 52. So like for them to miss expectations significantly, that would be a contraction, and I think that's highly unlikely. So I'm going to guess that it's going to be slightly higher than expected. In other words, that the treasuries will sell. So let's see what happens. Not going to take a trade. Maybe after it. Maybe we'll take a trade. Earlier, I was feeling pretty like not good because my gut, but I feel great now. I think eating and just being up and out caused everything to like settle and everything, and like we're okay now. All right, here we go. Well, liquidity is completely gone in the micros. So they're all treating this as an A-tier event. Ooh, look at that. 49.9. Wow, I was dead wrong. So services was 50.9, manufacturing was 49.9, and therefore composite was 50.9. So all of these numbers lower than anticipated. Yeah, Octa, well, if he stayed in it, but then if he stayed in it, I'm really kind of questioning the wisdom in that. But wow. Okay, so back up to 108 even. I'm a little bit skeptical about that number, to be honest with you. Like I said, I would be really, given like what we saw. Well, okay, I guess maybe not. I was going to say, given what we've seen with CPI and some of the inflation numbers lately, I would be really surprised to see like a contraction in any of these numbers, right? But that's wrong, because you could be seeing like general overall business activity coming off, but still have price pressures. In fact, the price pressures could be part of why it's coming back, right? So we kind of have to watch that, because if this is like a stagflationary thing, the treasuries might not continue through with that. But the market's going like that. Oh yeah, they did. Well, it's only 10 points so far. I think they could probably get way more out of it than that. Okay, well, my liquidity over here in the micros is okay. I don't know, though. So, like, if we say the high end of this range on the daily charts is maybe from, like, 08. Was a big order up at 08, right? You know? Can it really bust out of that range off of this news? I'm not so sure. So I think that looking for a continuation here is probably not the right call. If we get a good pullback, maybe. Of course, you could try the reversal. I want to be very clear, though, that it is still my opinion that it was, if you're day trading, not a good idea to hold a position going into the PMI unless you had some sort of information that suggested which way the PMI was going to be. Because it was at 23 when the news hit. So I think that we predicted the flow. Obviously, we didn't predict the PMI number, but how can I predict the PMI number? I'm just guessing, right? Some of the numbers I might know enough to be able to get a good estimate, but not the PMIs. But we were able to predict the flows overall pretty good. And that, you know, guys said if they're hot, then they'll sell. So conversely, if they were weak, then we would buy. Now, how much of a buy was it? About 20,000 contracts. Okay. So that, I think, went a little bit further than I would have anticipated for 20,000 contracts, but they did really pull the books, so. Let's give it a few more minutes before I try and... Octavia says hero trade? Like what? Reverse it now? It's just heads or tails without inside info. Guessing a number from one month to another purely off trends is hard, yeah. Like I said, you can sometimes kind of know what's generally going on in the economy and kind of like the ways in which the numbers tend to kind of like miss and guess them sometimes. But I don't think that we had that this time. You know, like, if we're talking about the next non-farms number or the next CPI number, I would probably have a guess. I wouldn't say that I would have an estimate that's good enough to trade off of, but I would at least have an opinion. Whereas with this one, it really is just like a wild shot in the dark, right? Okay, so I do need to note something I missed, which is that we have new home sales at the top of the hour. Well, so the S&P 500 are giving up a lot of those gains. The dollar is mean reverting here. The Japanese yen sure took a big jump up. That really helped the Japanese yen. I do guess that like seeing PMIs slightly weak is what we should be expecting for like if the economy is weakening and we need to start cutting rates and all that sort of thing. So like that, I guess, is kind of in line with the soft landing scenario, right? So we want to see like a slowdown, but not like anything super strong. Is it better off joining in if the reaction is strong and you move fast, you can get the info fast? I don't know about that one. I always lose trying to play that game. Hearing over the news squawk that Israel is ordering new evacuations in northern Gaza. I thought that they were going into, what's the name of that city in the south? I forget, but I thought that that was like imminent, and now they're saying the north? Okay. But the Israelis are clever. Maybe they're trying to knock us off the scent. I don't know. That just makes me think of all of this stuff that's been going on the college campuses where like this Jew got his eyes poked out with a flag and stuff. This is just awful stuff happening. Well, so I kind of thought 108 might be a key level because it has been a key level in the past and it's a really round number. But so far it's looking like they get to 108 and they can't get below it. So it's kind of acting as support. Yeah, stuff got hairy at Columbia University. Ooh, look at that. Well, it is quite, it's quite fascinating to me to see how both parties, or at least the extremists in both parties, are trying their darndest to make, both parties seem unpalatable to the average American. Because like on the right, you got like, they want Ukraine to be destroyed and like just outright pro-Russia, some of these guys on the far right. And then on the left, you've got like anti-Semitism galore. It's just like wild. To the conservatives' credit, I saw a lot more people getting mad about Majoring Taylor Greene's behavior yesterday than I thought I would see. So that was encouraging, but can't say so much for the left. Like the issue that I have with the left is like, okay, These people at Columbia University, I don't think that really represents most of the people on the left. From what I've seen, that's not most of the people on the left. But what bothers me is that the people on the left are so afraid to speak up about it. Like, they're all so outspoken about everything except for when it's their own people being super crazy. Especially when they spend all this time lecturing us about how we don't keep our extremists under control on the right. Trust fund agitators? Dude, it continued through. The call should have been a buy there. That would have been good for 8 ticks. That would have been a good trade. Would have been what, $20 over here? Almost $20. And why? Oh, because the dollar just keeps plunging. Well, let me come back over here. That looks pretty significant for the dollar, wouldn't you say? That looks pretty significant for the dollar. So the market seems to be treating this almost as big of a deal as the CPI. Right? Wasn't it April 10th? Yeah, April 10th was the CPI. Okay, so maybe not as big as the CPI, but in the treasuries here, you can say it's maybe half of the Israel flight to safety trades. So, okay, there's a big old stack right below us at 04 that I find a little suspicious. I think that in a normal situation, that a stack right there above a high and everything is very suspicious. In this situation, I'm going to say it's not as suspicious because we did have pretty significant economic news. The market is really reading that piece of news as significant. And so it may well just be somebody that if it gets below there, they're totally willing to buy it all. So I think I'd have to be wary about, like, if we get there and it pulls, of course. But I think there's less of a probability of it pulling as there usually is. Okay, so it is the best bid now. Let's see if anybody hits it. One order hits it, and it pulls, and only 12, 13 trades for it to go offer. So that does appear to be a spoof. Not that the market is really doing anything with it, but they did slip through it pretty easily. Well, let's see how much they trade here, because we've already had 3,000 contracts trade now since that happened, so. Yeah, I would say it was a spoof. Like in other situations, it might have made sense to go short up here to hope that it pulls off, you know? I don't think that particular trade makes as much sense in this particular action. Or, you know, you see it pull and you go short. But if you saw it pull and then you go short, you're still kind of stuck, right? Well, it could just be that it got converted or something. I don't know. So we saw like 5,000 to 6,000 contracts placed there. Since that spoof happened, we have now traded about 5,000 contracts on the bid. So You see what I mean? That like the latent liquidity in the market orders are going to be a lot more powerful than whatever that spoof is at that time. So the spoof might not have a whole lot of predictive power in this particular spot. Okay, so now we're getting the new home sales. New home sales change month over month. I think we got 8.8% versus an expected 1.1. And Richmond Fed Composite Index -7 versus an expected -8. So the market may be reacting to that a little bit, but they don't seem to really care too much. That 04 is now becoming a liquidity hole, it appears. Oh, 03 half, 03. Well, they could have hole all the way back, possibly to 108 even, in fact. We are seeing the dollar flip here, too. So they slipped through those two prices, but so far it's kind of like doing nothing now after that. Oh, there's another downtick. This is like clicked it to recenter. Well, so far I don't feel like I have a very good feel for the pace of this flow. That's usually what I get when it seems like the dollar is really the real driver. Be careful, because I'm concerned that the Japanese yen will retrace. You see the yen over here? I'm concerned that the yen is going to do this. And if that's the case, the dollar will probably come back. And if the dollar is what's driving these moves, then maybe you would get a pretty significant retrace. Okay. They slip back through here. They don't quite slip back through, but they do trade back to 04. But they trade a decent amount to get above 03 half. My shoulders are sore from working out. Oh, man. Definitely the dollar here. So I sit and I wait and I bide my time. Let's see. Does Zero Hedge have a better synopsis of the PMI numbers that we got? Not yet. So 04 was where we saw the stack, right? Kind of funny that although it did, after trading a bit there, we did see a test of the lower area, and then they came right back to it. So, and now the kind of sort of liquidity hole behavior looks a little bit stronger. There's still a lot of volume that wants to trade around here, though. So I would say, while I do think that we have a bit of a liquidity hole here at 04, you're going to have a relatively wide range around it. Could be good for scalping, actually. Okay, they made an attempt, but it again came back to 04. I have to say that was a pretty strong attempt at reaching the high too. I'm actually a little bit surprised that it came back to 04 before them ticking another new high. So I still feel like that, kind of like the pace, like the twists and turns of this, that I'm not very good in line with this. I am still seeing the dollar kind of trying to recover. But the Japanese yen chart looks a lot better. The Japanese yen chart looks like, you know, they've found their spot and that we could just settle here. Okay. The buy pressure still looks like it's possibly there. S&P 500 is certainly still buying. I would say that pretty much everything is up off of this news. Japanese yen is up, Bitcoin is up, oil is up, copper is up, gold and silver are up, equity markets are up. What's not up? Copper is still down 1.25% on the day. I mean, it's moving up, but it hasn't recovered all of its losses. Same with natural gas, wheat. Oil is break even, essentially. That sure makes, yeah, I'm sorry, too late. I was like, kind of makes me want to try and get a fill at 05. Okay. Not quite going, though. I think I probably could still, I don't know if I would get a fill at 05. I'm not going to try. This is probably not going to happen. I'm a little worried about if you got filled at 05, it might not be a good thing. Okay, there was a new high. No. That was equal. They made it go bid. Made it go bid. 06.5 would be a new high. I don't know, this has been giving pretty good pullbacks on an uptrend so far. They're up at the highs. The dollar is not necessarily like straight up falling either, so maybe not so much dollar correlation anymore. I'm not seeing super strong net cumulative delta buying in the 10-year either, though. It's kind of tepid. Seems like it could be. You might. I'm a little like, okay, so if we do move higher, something that I might see is like a really big change in cumulative delta higher. It might just all kind of puke out there. ZB and UB look pretty weak for you. Well, so we are getting steepening on this move. So we should see the 5-year driving the most and the 30-year driving the least. So that's also, so I was looking at this like, oh, I could have taken this and it would have been like, what, $15, $20 now? And you look back at that and you're like, wait, how can that be? Because we moved so much over here. But it actually, it is steepening. And that's kind of holding our 10-year and our 30-year back a little bit. Still doesn't look like he would have gotten a fill at 05. Okay, there's a fill at 05. Okay. It was a pretty good across the board tick. Not the strongest bid, but it's okay. It is kind of doing this thing that now that I'm rooting for it a little bit to go higher, it seems a little hesitant to do it. Okay, there you go. There you go. There's a big stack there. It was 6.5 following that. My guess is that they'll eat through this liquidity at 08 and then things might try to kind of calm and rebalance again. You did get what I was that was kind of the thing that I was talking about though, where I was like, well, if we do move higher, what you might see is a really quick increase in cumulative delta, because so far it had been kind of flat. So like market buying and selling relatively equal, but the passive buyers actually really in control, and so eventually they will squeeze it and people will stop out higher. That's probably what happened there. They didn't trade the 08 yet though, down tick. Not necessarily over, but a down tick. I feel like I already missed this one. I think that they gave me 2 chances and I was just not in line with it, right? I think I was concerned about the chances of it reverting a significant amount because of the dollar, but it looks like the intuition that you would get from like the significance of the number and how the market is probably reading the number is winning out and is just leading to trend higher. So now I'd have to be concerned about not so much it reversing on us as much as it like just finding a spot like 08 and just, you know, making a home there. Oil is really pushing there. With seeing oil push like that kind of makes me think, at what point is this too bullish? Right? And it becomes a bad thing. Back to the scene of the crime, eh? Not the crime, but the last crime, I guess you could say. The crime, I think, would be back to 108, even. But like I said, like I would expect 108 even to have been a key level, so it's kind of interesting that they came to 108 and that's where they bounced. Gonna have to rewatch today's stream tonight. Dom movements were super fast. Yeah. I mean, I kind of feel like, okay, so I feel like I had things right on terms of like the larger flows. We didn't do anything until 23. Then we get a 23 and badoosh. Okay, it comes up to, I think it was 04 at first. Yeah, 04 was like the high, and then it came back to 08. So that would have been a good place to buy here, right? We had a good place to buy there, another place to buy at like maybe around 02. And maybe even you could say 03 half before this latest pop up. So I think it gave us a couple of good opportunities to get in. But I just did not read any of those as that. Okay, that's a I don't know about that one. So usually when you get a stack like that, it's not like right on the offer. It ticks down. That is, it's been a long time since I've seen something like that where, you know, a price goes offer and the stack is right on that change in the offer. It's not actually resulting in volume either. The market seems to be ignoring it. Like I'm not seeing market orders come out or anything. I kind of would think that something like that would cause a little bit of selling. And then you find out if it was really a spoof to try and get filled on the bid or not. But if that's what it is, he ain't getting his bids filled yet. That seems very suspicious to me. Downtick in 7K. Well, they haven't traded 04 yet, but all of that kind of makes me a little bit like not as interested in it actually. Like that is interesting, but one, you'll notice that when I see big orders like that makes me less inclined to get involved. And then pretty clear again, I saw like that liquidity hole kind of behavior at 04 many points, so it doesn't surprise me to see us back there again after such a strong stop run higher. So for them to get back to there, and especially if they get below 04, that kind of suggests to me that the buying impulse is over. That doesn't necessarily mean that we'll retrace a ton of this. That's probably up to the dollar, but it probably means less opportunities than there were. But let's see if they do anything with this 05. I have my accounts on the sim account, so but it doesn't look like I'm going to be doing anything today. I wonder if I come over to a volume, not volume profile chart, like a daily chart. No, that's not enough of a change to shift momentum. It is a pretty significant change narrative-wise, though. Okay, so now it's pulled back to 3. They traded 46.62 to make it go bid. Goes offer again. 1,500. So even though there was like orders pulled and everything, they did trade 6,000 contracts at 05 on the offer. So, and then they stacked 6 on again. That really makes me want to try for a short now, but I know better. Stay away from the big ones. To see 6,000 offer, and then it pulls, and then they trade 6,000, and then they stack 6,000 on it again. That's a lot of shenanigans and selling at that price that is not just completely fake. Granted, there's a pretty big bid at 04. Feeling a little sleepy all of a sudden for some reason. Maybe I should just lay my head back and take a nap. I don't know why that would make me sleepy. That's kind of weird. When you control shift, sure. It's true. I don't know if that makes me want to buy it on the theory that it will go higher, though. Does it? Because what I'm seeing right now, I think still suggests to me that they're settling at 05. I'd say that the liquidity is pretty thick now, though. So let's see here. We do have an auction today, right? I put that on here. No, I didn't put that on there. 2-year auction. No. 1300 Eastern Time, 2-year auction. Okay, there's 04 again. Okay. See, I think that there may be a possibility of seeing some upside action later, especially with the 2-year auction. But it looks like that they've developed enough of a liquidity hole that until the end of my session here, so for the next 30 minutes, I'm not anticipating them going much further. Again, I think that I missed a trade. I should probably, I'll put it in here, probably should have bought the pullback after the news, but was too concerned about possible dollar volatility that didn't matter. Probably a case of me being too picky, too risk adverse. Still decent stacks at 05. Alligator says still unbalanced. I haven't really seen a very strong market order impulse since that reach that led to the last high. Since then, I'd say it's been pretty flat to down. Cumulative delta should be at least 50K. Well, we started at 20. It's got as high as 50. So we had a 30K net change. And I feel that a 30K net change would actually be on the high side for S&P PMIs. But the market is treating this like this completely shifts the narrative and everything. And in that kind of an event, I think that 60K wouldn't be out of the question, right? But there does appear to be enough of a hole that I'm not too optimistic that we'll get out of here until I'm gone. Maybe after I'm gone, we get that move higher. Just want to take a nap. I don't know why I'm so tired this morning. It's awfully odd. And especially since it come on so strongly all of a sudden. But maybe that's just a knockoff effect of my gut. Having a hard time today. That was 03 half. That's a pretty interesting take. I'm actually detecting a decent amount of selling here now. And some flattening along with it too. You see the 5-year down quite a bit compared to the 10-year. Only down 2 ticks. Pull up the cost basis. Oh, you think we might have a cost basis retrace? It does seem like that could be in the cards. So right now, the buyer's cost basis is sitting right at 108 even. I kind of feel like that. Well, I don't know. Look, we had this. I thought, the possibility that it comes back to here, or maybe even all the way down to here, you know, a little bit weary about that. I didn't read this one very well at all. I think I should have read that news as being more significant than I did. I do that a lot lately. Okay, but so then we got this push to new highs, and I thought, okay, maybe it's a trend day, or maybe they kind of like, you know, settle back and kind of do this, right? But now we've got that. Is that significant? Well, that right there seems significant. That definitely kind of shifts me a little bit. So now all of a sudden, when I thought that we were just creating a hole and we were just going to wait there, now I'm kind of put in this scenario of retracement to 108, perhaps. I think that I have to put it on the board at least. But I'm not entirely sure what it's going to do. That candle right there in particular seems a little off to me. That's way more selling in one bar at this point than I would have thought. So. Not much since that downtick. Bitcoin seems to be coming back here. The S&P 500 seems to be maintaining its gains and chilling at 5,100, let's say. I don't know, man. If I wanted to buy it, 03 wouldn't be a terrible spot. I don't know what the chances are that it gets back to 108 even. I actually think I'd be a little surprised if it got to 108 even. But it's been hanging out here at 03 for a while. So if I really thought there was going to be continued trend, 03 wouldn't be a bad spot. We're like way too late in my session for me to be doing anything now at this point. We got 10, 15 minutes left, so I'm just going to sit on it. But, if the theory was we buy it here and then the 2-year auction is good and pushes us to new highs, I think that might be an okay slow burner trade. And of course, the risk would be that it gets to 108 even and possibly even below that. Then the seller cost basis is 28.5. It's a little warmer in this room. That must be what make me sleepy. It's got a little warmer. Back to 04. That big offer is still there at 05. This is, I think, a good example. If I come and I put the chart up here, will it? Oh, it doesn't. It didn't have the history saved. Guess you have to have had opened it once. But if we were to look at it, you would have seen we came up and then all of a sudden this thing pops up, right? And that's what, a lot of, this is the thing that I complain about where it makes the book map people think, that's resistance. Now we should sell it. But I still think the most likely scenario is that we kind of range around 04 for a while. Possibility that we touch a 108. But also a really good possibility that 2 hours from now, we have a little bit of up movement and the 2-year auction is good and we move higher. Excuse me. So I must say though, the way that offer initially appeared and then they ticked down away from it, they ticked into it, they traded 6,000 and then another 6K popped up. Kind of unusual. Kind of unusual. Week PMI revives. Soft landing hopes. 23rd April. Wait, did I put that this was the 20? Yeah, okay. I think, though, that when yeah, OV 2024 04 21 .md should be. Oh, that's why, because I made that one on Sunday. That's why. Yeah, really. It's kind of funny because it's been like 30 minutes now, right? And we're still toying with 04. We've toyed a little bit above it. We've toyed a little bit below it, but you can. And this is a case where usually that would be the point of control now, right? This is a case where, you know, I was really using my DOM reading to see that that was kind of where the liquidity hole was. So I guess I could consider that a good win. Would still rather have bought 108 even. Made like what, 20? I could have made 25. Could have made 25 best case scenario, probably. Well, do we got anything else? I'm sure. Yeah, it does look like stream has died down a bit today. Y'all saw me that I didn't take a trade and were like, well, screw this. I should have taken that 108 even. I just guess I wasn't in the mental space to take a trade yet. I was still too like surprised from it, but I should have been like, I know what this means. Was that just a mental thing? Could have been. Guess there's no way for me to really know. But if I had been sitting there being like, this is going to be a big piece of news, I want to take a trade off of it, whichever way it is and whatever, then I probably would have been a lot more prone to take a trade. Well, I want to give it a little bit of time there, but there's still that big order. Just remember, we got an auction at 11 Eastern time, or 11 my time. It would be 1 o'clock Eastern time. And the Japanese yen did rise off of that, but they're still kind of low. So a currency intervention is still something we got to keep an eye on. I would think that would happen during our session if it was going to happen today. So maybe tomorrow. We got earnings, so we'll see where things go from here. But I think, I think the market's going to like this. I think that this could turn into, well, here's the S&P. At the very least, it could get us back to like 5163. Potentially. They'll only come back to the 100-day moving average. That's not really a real pullback. Real pullback would be all the way down to 4806. But maybe earnings suck. Who knows? I'll see you guys tomorrow. Stay excellent, team.